For decades, Wall Street has had this one simple rule. Whatever you do, stay away from the first 20 minutes of the trading day. They call it the amateur hour for a reason. It's just pure chaos, way too volatile and dangerous even for the pros. But what if all that conventional wisdom is just completely wrong? See, there's this one record-setting trader, a guy named Oliver Velez, who built his entire career by shattering that rule. In fact, he claims to have made a staggering 80% of his profits during that exact 20-minute window that everyone else told him to avoid. And get this wasn't some lucky fluke. It was a systematic approach to mastering the market's most explosive period. He basically turned Wall Street's biggest no-go zone into his personal ATM. So you're probably asking, how is it even possible to find any kind of order in that chaos? Well, it turns out the entire strategy is built on a remarkably simple foundation, using tools that honestly anyone can get their hands on. The secret isn't some complex secret algorithm. Nope. It's about recognizing that the market is always in one of two distinct states. The best way to think about it is like a living thing, It's constantly breathing in and breathing out. And to actually see these states, you only need three super simple things: a 2-minute chart, a short-term moving average, and a long-term moving average. That's it. Seriously, no complicated fancy indicators needed at all. Okay, so this whole breathing visualization is the key. When those moving averages are squeezed close together, the market is in a narrow state. It's inhaling, right? Coiling up like a spring, getting ready for a big move. And that is where the highest probability trades begin. But when they're far apart, it's in a wide state. It's already exhaled. That's a totally different environment. So once you've identified a market that's inhaling in that narrow state, you don't just jump in blind. Nope. You wait for a very specific signal, a crystal clear sign that the big money, the institutions, are making their move. And that signal is called an elephant bar. It's this huge, solid candle that just dwarfs the previous bars, like the footprint an elephant leaves behind. You can't hide it, and it's basically screaming at you that billions of dollars are flowing into or out of a stock right now. And this right here is the formula for success. You need all three elements to align perfectly. You need the right BAR, that's our elephant bar, in the right location, so above or below the moving averages, all happening within the right state, that coiled up narrow state we were just talking about. So, how do we combine all these ideas into an actual actionable plan? Let's build the step-by-step blueprint for executing a trade right when that opening bell rings. Here's the playbook. Step 1, before the market even opens, you find stocks where the moving averages are nice and tight. Step 2, you wait for that very first 2-minute bar to complete. Step 3, if it's a powerful up bar, you enter 1 penny above its high. And step 4, this is the most critical part, you immediately place your protective stop 1 penny below that same bar's low. This quote really gets to the absolute heart of the strategy. See, your job isn't to be a genius who predicts the future. Your job is to be a ruthless risk manager. The market is supposed to make the money. Your only job is to cut your losses instantly when a trade isn't working. Your entire risk on every single trade for the rest of your life is limited to the size of that one single entry bar. That's it. You might win 10 or 20 bars worth of profit, but you will only ever lose one. This is the absolute key to survival and long-term success. Getting into the trade is one thing. But the real skill, the part that separates the pros from the amateurs, is managing the trade once it's actually moving in your favor.
So here's the technique called the color game. Imagine the green team is on offense, right? They score a few times, and then the red team gets the ball, but only manages a tiny little move. When the green team immediately takes the ball back by moving past that small red bar, it shows overwhelming strength. And that's your signal to add to your winning position.
Now, when do you take profits? This strategy uses a simple 3-push pattern. You expect the stock to move in waves. It pushes up, rests, pushes again, rests, and on that third push, that's when you start selling. You don't wait for it to reverse, you sell right into that strength. And to protect those profits, you walk the dog. As the stock makes new, powerful fat bars in your favor, you move your protective stop up just below them. This way, you're locking in gains, giving the trade room to run, but making sure you don't give everything back if it suddenly reverses. So the entire journey of a trade comes full circle, right back to our core concept. You enter when things are near and narrow, full of potential energy, and you exit when things get away and wide, when that energy has been spent. It's a beautifully simple, logical cycle.
So why does this focus on such a short time frame actually work? Well, it's because of the certainty of time. If I asked you where you'll be in 2 minutes, you know with almost 100% accuracy. 10 years from now? No idea. This strategy lives in that high probability 2 minute by 2 minute window where your predictive accuracy is at its absolute peak.
Ultimately, this quote captures the entire philosophy. It's not about being smarter than the market. It's about having a system to identify strength, cut weakness without emotion, and then you just have to let your winners do their job. Which leaves us with a final thought. In a world full of complex algorithms and financial engineering, could a system built on simply observing the market's breadth and the footprints of giants really be the key to mastering its most chaotic moments?